Hello everyone, this is Doc from the Wealth Boardroom. Welcome to the channel. Today we're going to explore the fascinating world of cash flow. This concept is more than just a buzzword. It's the lifeblood of any successful financial endeavor. Whether it's running a business, investing in stocks, or managing your personal finances. But what exactly is cash flow? At its most basic, cash flow refers to the movement of money in and out of a business, an investment, or an individual's financial portfolio. There are two main components of cash flow: cash inflows and cash outflows. Cash inflows are the money coming in. This could be from a salary, or wages from employment, profits from a business, or dividends from an investment. It's the positive side of the equation, the income that fuels your financial engine. On the other side, we have cash outflows, which is the money going out. This includes expenses such as rent or mortgage payments, debt repayments, and taxes. It's the cost of living, the necessary expenditures that keep the lights on and the wheels turning. When your cash inflows exceed your cash outflows, you have what's known as positive cash flow. This surplus can be reinvested, saved, or used to further increase your income. Conversely, if your outflows are greater than your inflows, you're dealing with negative cash flow. This is a warning sign of potential financial distress and a situation you'll want to rectify as quickly as possible. Understanding the dynamics of cash flow is paramount in the pursuit of financial success and generational wealth. It's about more than just making money. It's about managing money, making it work for you, and ensuring that you're not just surviving, but thriving. Cash flow is the heartbeat of your financial health. It's the rhythm that dictates the pace of your journey towards financial independence. And like a well-composed melody, it requires balance, harmony, and careful orchestration. Understanding cash flow is the first step towards building generational wealth. It's the foundation upon which all other financial strategies are built, the cornerstone of a stable and prosperous future. So, let's dive deeper and discover how to leverage cash flow to create generational wealth. Now that we understand cash flow, let's delve into how we can leverage it to build generational wealth. Think of cash flow as the lifeblood of your financial body. Positive cash flow, where inflows exceed outflows, provides a surplus. This surplus isn't just extra money, it's a powerful tool that can be reinvested or saved to accumulate wealth over time. Let's first discuss asset accumulation. This simply means increasing your assets, things that provide value or income over time. This could be real estate, stocks, bonds, a business, or anything else that appreciates in value or generates income. By directing your positive cash flow into these assets, you're effectively putting your money to work for you. As these assets grow and multiply, so does your wealth. Now, let's talk about debt management. Debt is often viewed negatively, but when managed wisely, it can be a tool for building wealth. For instance, taking on debt to invest in assets that yield higher returns than the cost of the debt can be a strategic move. However, high-interest debts, like credit card debts, can quickly eat into your cash flow. So, managing your cash flow effectively also involves reducing and eliminating such debts. It's like a game of financial chess, with cash flow as your queen, the most powerful piece on your board. Positive cash flow allows you to strategically advance your assets while keeping your debts in check. But remember, building generational wealth isn't a sprint. It's a marathon. It's about long-term perspective, patience, and consistent effort. The small steps you take today, be it investing in a promising startup, purchasing a rental property, or paying off a high-interest debt, can lead to significant wealth accumulation in the future. Consider this. If you invest just $100 a month at an average return of 7% per annum in 40 years, that would amount to over $200,000. That's the power of leveraging cash flow for generational wealth. Remember, managing your cash flow effectively is critical to accumulating assets and managing debts. It's not just about making money, it's about making your money work for you, ensuring a stable and prosperous future for you and the generations to come. To give you a real-world example, let's look at how cash flow works in real estate investing. This arena offers a tangible, hands-on approach to wealth creation that hinges heavily on the concept of cash flow. Imagine you've purchased a residential property and you're renting it out. Every month, your tenants' rent payments are your income inflow. This is a steady stream of cash coming into your financial portfolio. But it's not all profit. You also have outflows. Your mortgage payments, property taxes, insurance, and maintenance costs. The balance between these inflows and outflows is your cash flow. Now, if you've made wise investment decisions, your rental income should exceed your outflows, leading to positive cash flow. This surplus isn't just extra money in your pocket, it's a powerful tool for wealth generation. Why? Because it can be reinvested. Here's where the magic of asset accumulation comes in. With your positive cash flow, you can invest in additional properties, expanding your portfolio, and thus your income inflows. Over time, this cycle of positive cash flow and reinvestment can transform your single property into a real estate empire. But remember, real estate investing isn't just about buying properties and collecting rent. It's about strategically managing your debt, negotiating better mortgage terms, and keeping your expenses low. It's about diversifying your investments, not just within real estate, but across different asset classes. It's about maintaining a long-term perspective, weathering market downturns, and capitalizing on opportunities. The beauty of real estate investing lies in its potential to generate consistent, reliable cash flow. This isn't a get-rich-quick scheme. It's a methodical, disciplined approach to building wealth brick by brick, property by property. As you can see, real estate investing can be a powerful tool for generating positive cash flow and building wealth. Through strategic investments and effective cash flow management, you can build a financial legacy that not only benefits you, but also generations to come. Another excellent example of leveraging cash flow for wealth generation is dividend investing. It's a strategy that's been around for years, and for good reason. Dividend investing involves buying shares in companies that regularly pay out dividends. These dividends then become a steady source of cash inflow, which can be reinvested to buy more dividend-paying stocks. Let's picture it this way. Imagine a snowball rolling down a hill. As it moves, it picks up more snow, growing larger and larger. This is what we call the snowball effect, and it's a perfect metaphor for dividend investing. The dividends you receive are like the new snow, making your investment snowball grow larger over time. Now, it's essential to remember that not all companies pay dividends, and those that do aren't necessarily a better investment. The key is to find companies that not only pay dividends, but also have a history of consistently increasing those dividends. This shows that the company is financially healthy and committed to returning profits to shareholders. This strategy is not without its risks. Like any investment, the value of your shares can go up and down. But remember, as a dividend investor, your primary focus is on the income generated by your investments, not necessarily the day-to-day fluctuations in share prices. And here's where the magic of compounding comes into play. When you reinvest your dividends by buying more shares, you're increasing the number of shares that will generate dividends in the future. Over time, this can result in exponential growth, turning a small initial investment into a significant cash flow stream. So, how does this all tie into generational wealth? Well, the cash flow from dividends can provide a stable income source, allowing you to build wealth over time. Plus, these investments can be passed down to future generations, creating a legacy of financial security. Dividend investing is yet another way to use cash flow to your advantage in your wealth generation journey. We've covered a lot of ground today, from understanding cash flow to how it can be leveraged for generational wealth. We've delved into the intricacies of cash flow, how it ebbs and flows, and the profound impact it has on our financial health. We've explored how positive cash flow, when inflows exceed outflows, paves the way for reinvestment, savings, and ultimately generational wealth. We've also examined the importance of asset accumulation, how it serves as a stepping stone towards greater financial stability and wealth. We've learned how astute debt management can convert a potential liability into an asset. We've seen real-world examples where individuals and businesses have used real estate and dividend investing as effective strategies to generate positive cash flow and build generational wealth. Right now, let's discuss another crucial concept: diversification. Diversification is not just about having various income streams, but also about spreading your investments across different types of assets. This is a safety net, ensuring that even if one asset underperforms, others may compensate. And then there's the long-term perspective. Building generational wealth isn't a sprint, it's a marathon. It requires patience, persistence, and a focus on long-term growth rather than short-term gains. It's about making strategic decisions today that will continue to pay dividends years, even decades down the line. Remember, cash flow isn't just numbers on a page. It's a measure of financial health, a tool for building wealth, and a pathway to financial independence. It's the linchpin in the pursuit of generational wealth, offering a roadmap to financial stability and legacy preservation. Thanks for tuning in. If you found this video valuable, please like, comment, and subscribe to the channel. Remember, your journey to generational wealth starts with understanding and managing your cash flow. Until next time, this is Doc from the Wealth Boardroom, signing off.